11, 2019. It's Friday. Everything is absolutely hopeless to those that have hopes in the trade deal. Despite of the bullish action, Leonardo lost his mind one more time. He thinks that the market is still going to drop. So happy market right before the huge drop. We're looking to trade the market between 1 till 4 p.m. regardless of the size of your trading account, especially if your account is small. This is the biggest opportunity the market has presented us with in the last 8 months. So take advantage of this. Guys, 1 p.m. oil inventories. Oil is already creating Move 11 pre-market. You're going to say, Leonardo, you've been talking about the Move 11 pre-market forever. And yes, on certain days the market dropped, but then the next day it popped. Guys, it's all about to come to an end, okay, with the market breaking substantially lower. So here's the setup for the day. Read between the lines despite what they're talking about in the news right now. Pay attention to the charts. Yes, Iranian oil tanker gets blown up in the Red Sea. Oil futures are up. And so is the report, talking about the projection for decreased demand in oil, but also talking about the decrease in supply. Therefore, as a result, oil futures are temporarily up, but they're not going to be up for a long time. The key moving event, as far as the news is concerned, 2:45 p.m. So the market is likely to move higher until 2:45 p.m. Options on the put side are going to be cheap. This is how you can get 10, 20, 30 times return, meaning 1,000, 2,000, 3,000% returns. You don't have to invest a lot of money, but you can literally turn on a day like today, $1,000 into 10, 20, 30K. So let's roll. 245 Trump versus Leo. Hey, Leo, let's roll. Mr. Leo, let's have this meeting. As a matter of fact, they may say Leo never showed up to this meeting with Trump. And what's going to happen to the markets then? Leonardo, I mean, nice of you to dream about this. I bought my put options a week ago. So what are you going to tell me to do now? Guys, stay with the strategy. Manage your account. Don't invest like a ton of money into every single trade and you'll be fine. You can make a ton of money today between 2:45 and 4 p.m. trading today's expirations. It doesn't take a lot of money. $500 on a day like today can go a very, very long way. So here it is. Apple, all-time highs pre-market. Is that a good thing? Ton of upgrades in various stocks. Institutional investors are going crazy. They seem to be wanting to upgrade everything despite of whether things are good or bad. They just want to upgrade. They just want to upgrade the hell out of everything. But we're beginning to stair-step shorting BKNG one more time at 10:15. Add in at 1 p.m. and add in at 2:45 p.m. on the put side despite of the market bullish activity pre-market. Very awesome trade seems to be Workday. Workday is up $10 on an upgrade on a huge volume of 3,000 shares. When I say huge, I'm being sarcastic. This is not huge volume. Basically, stock pops $10. I'll show the chart in a minute. Probably one of the easiest trades of the day. Now, Workday and Amazon clearly in the same sector. They're in the cloud plays. AVGO puts. Basically, AVGO will start reversing as soon as Apple starts reversing, which Apple hitting all-time highs actually represents an opportunity to short opposed to the general belief. So basically, we're still shorted the bounces. Now, we will outline certain conditions in this video, which will tell you when to switch the direction. So stay focused, guys. This is the day where you can make a ton of money. Okay, here's the deal. At about 4:42 a.m., oil futures report comes out. Oil futures are up 2%. Why? Well, if you read the first paragraph, the weakness in the global economy will hurt the demand for oil and its byproducts. No shit. We've been talking about it for the last few weeks in pretty much every video, saying that the demand side is not healthy, therefore it is negative for the markets overall. But if you read this paragraph till the very end, it says, but it also appears that the outlook for supply growth is also slowing. So basically you got a situation where demand is slowing, but so is the supply. So at this point, the market is taking it as a positive, thinking that the downfall in demand is going to be offset by the downfall in supply. Now, why would the Iranian oil tanker be blown up pre-market before Trump meets with Lou Hey? I don't know how to pronounce this guy's name, but basically, there's a great probability Trump has orchestrated this tanker blow up by a missile in Red Sea, okay, just to sustain the level of oil above 51. There's many reasons for him to do it. If oil would have broken below 51, it would have been hell for the market. So Trump goes out there, blows up the Iranian oil tanker. Why? Because he knows there is no trade deal. There is no deal. So the hopeful of the trade deal would be highly surprised between 245 and Trump. He likes to go and publicize all these negative comments after hours. So position yourself for the drop in the last hour and position yourself also for the drop on Monday. The high positive correlation between oil futures and S&P continues as oil is up on this blown up tanker in the Red Sea. Okay, oil is up 1.6%. So is the futures of S&P 500. They up about 1%. 1% represents about 30 points. Think about it this way, guys. 1% rise in S&P 500 futures actually could be reversed in a move 2 formation or even in a move 11 formation. But if we focus on a move 2 formation, 1 point up, 2 points down represents a 60-point drop in S&P futures, puts us about 29, 10, 28, 20 level. Okay, 3% drop will put us back to the 28.81, which was the low set just a day ago when the oil futures were dropping. Now, the probability for the oil futures drop is still very high. So technically, oil could have rallied substantially higher on this news of the missile hitting the Iranian tanker, escalating all kinds of situations out there in the Middle East. But oil is not really up as much. I mean, 1.6%. I mean, this chart right here shows you 1.52 up. Oil at 54.22 is the time I'm recording this. Perfect head and shoulder move. 11 top formation on oil after hitting 54.7. Now, we've pointed out 54.55 is a point where oil could rally up to, followed by the reversal lower. Now, at the same time, you have a very similar move 11 formation pre-market on S&P 500 futures. Now, it's not huge, but it is there nonetheless, confirming all the prior trends on October 10th, 11-11-11. Intraday, move 11 on October 9th, 11-11. Move 11 on October 8th, 11-11. Move 11 behavior returns October 7th, 11-11-11 after the gap down. Question of the day, why should we stay bearish? Because it appears like every time we get an 11 move, the next day the market moves higher. So why should we stay bearish? Well, it's because when the optimists just get incredibly high and everybody gets incredibly bullish, as it appears to be the sentiment among all the institutional investors, guys, some people will sell and the volume speaks louder than words in the stock market. So here's a chart of workday. So do I want to short workday on a bounce? I mean, the stock is up from yesterday of like 174. It's up pre-market trading between 180, 183. Do I want to short this? Hell yeah. Because this pop is happening on the volume on 3,000 shares. Again, volume speaks louder than words in this type of market. So it's not to be ignored that this stock, which is in the cloud sector, is up on very tiny volume. So this move higher of about $10 higher is likely to be reversed throughout the trading session today or Monday. So do I want to short it? Absolutely. It's followed by a very nice death cross formation. Now, when these death cross formations, they take place, the reversals are likely on certain days to bounce, but they typically fall by a reversal lower. So great opportunity on workday today. Nice and easy trade. Facebook, don't lie. Heading for death cross. Now, historically, Facebook has been actually able to escape some death cross, but not this time because it's outlined by a very bearish, freaking bearish as hell head and shoulder formation. So Amazon is at the death cross. How many bearish reversal candles do we need to see? There's going to be another one on Amazon today. It is up on very mediocre volume pre-market. It's popping 20 bucks. At the time of recording this, Amazon is actually trading at, damn it, it is actually trading at 17.40. Okay, but could it still fall $80 today? Absolutely, as the market reverses in the last part of the day. Amazon chart is absolutely broken. Any bounce in Amazon is to be shorted despite of what they're talking about in the news. BKNG, head and shoulders, hanging around this blue line, under the blue line for too damn long, trading on very minimum volume. Okay, that chart is about to get broken to the downside as well. Not without a potential pop early in the day. Today, AVGO, the charts don't lie, about to make a death cross. What's notable yesterday, the very nice bearish reversal formation right here. Look at this formation on this candle yesterday. Pop and drop. It's likely to be repeated today. Options are going to be super cheap on the put side, so it doesn't take a huge drop to actually help you create some substantial gains. These options are going to be ridiculously cheap on the put side because everybody is going to be blinded by the party. They're going to be blinded by the music of the 2:45 meeting, Trump and Leo, okay? And it's not going to result in a kind of happy ending. Things are about to drop, guys. So when we focus on the chart of NASDAQ, head and shoulder, just like on Facebook, in the bearish formation right here, bearish reversal candle continue to shape this chart, guys. Blue line gets closely to the orange line. This is going to be a death cross in the next 45 days when oil will hit 34 bucks. So get ready for it, guys. It's about to start going down. Dow Jones, same thing. Bearish reversal candles continue to dominate. Still under the blue line. If you look at both charts of NASDAQ and Dow Jones, they may be appearing like they're not 100% going up or down in the same direction on certain days. But overall, if you compare these charts, Dow Jones is also making this death hook formation, blue line getting terribly close to the orange line. This death cross will take place. So going back right here, you can clearly see the formation here. The formation here is highly resembled by the Dow Jones as well. Actually, a little bit closer on here. A lot more bearish reversal candles. We've covered the S&P chart, head and shoulders, likely to be followed by a drop. So short the hell out of the bounce today. Oftentimes, the market does not give you awesome opportunities like that. Head and shoulders on S&P weekly chart as well. Okay, there's only one bullish chart. So I will take the 99% probability, since about 99% of the charts are portraying death hook, death cross formations. There is a big drop in the making. There's only one chart define all the probabilities and possibilities, and that is the chart of Apple. Because everybody keeps upgrading it every freaking day. But there were plenty of best shorts that we have described on this channel, such as Amazon hitting all-time highs last September at a level of 2,052. We said short the hell out of it when everybody was incredibly bullish. And within 72 hours, Amazon dropped about 152 bucks. Now, clearly, Apple cannot drop 152 bucks, but percentage-wise, we're saying Apple can easily return to 213, 205 level. I know it doesn't look like this is even remotely in the cards, but when it doesn't look like it's remotely in the cards, guys, this is actually when shit happens. Okay, so this is what we got going on as far as levels. We continue buying puts as the market goes high. 29.71, this is where the market is at. Pre-market, as I'm recording this, it could resolve lower by the time the market opens. But if it continues higher, we're looking for entries at 29.81, which is exactly about 100 points above the lows we were just setting 24 hours ago. 29.94. Guys, this move higher is not going to be sustainable. 29.94 is your ideal entry. So we're at 29.94 by about 1 p.m. or 2:45 p.m. This is your entry. The market is likely to reverse from there. So currently we're targeting levels of 29, 22, 29. 55 is supposed to say 28.55. Clearly 28.55 is what we're targeting right here, guys, to the downside. Yesterday was a clear move 7. I pointed out we're going to create a couple of conditions of when you actually want to get out and get bullish, because despite of all this chart pattern is creating highly bearish contacts for the market, okay, temporarily, short-term, meaning like a couple of days, the market could go higher if certain conditions are met. So for now, focus on move 7. Basically, market pops, they buy the dip, pops again towards the end of the day. 2-day sequence is 7-7. Now, this is the time to actually get concerned and worried. We're not so worried based off the other conditions we're observing, but if we get another 7 today, that is going to be a highly bullish sequence of 777, and the market could break out above 3,000. If that does take place, then we are switching our strategy from shorting the bounces to actually buying the dips. Now, this is how this chart looks on a 2-day sequence, basically a 7-7, 7-7. 5-day sequence 1, 11, 3, 7, 7. Now, because this sequence was preceded by so many bearish sequences, okay, we don't believe we're going to get another 7 today. We're likely to go into a bearish move at some point in the day. However, if that does not take place, then we are going to get a 777. 777 is to get highly bullish, so we may have to reverse. That is one of the conditions that has to be met. Basically, this sequence, this is how it looks on the chart. It looks highly bullish because there's kind of like a V formation in here at 28.81. But to no surprise, this 28.81 level could be hit by the end of the day or Monday. Next market move, that means for today, is a move to 11. We're seeing the highest probability to a move 2, slight probability to a move 11, and a slight probability to a move 7. Overall, we're expecting a reversal at some point in the day. Now, most of the move Tuesday will reverse by about 10:15. That is why we're actually recommending starting to accumulate some put positions around 10:15, adding them at about 1 p.m. and ending some more about 2:45. Now, big concern is the fact that VIX is actually down second day in a row. Now, VIX is still numerically high, but at this point, it's a side trend, as you can clearly see. VIX is crashing today, pre-market October 11, after being in a very bullish uptrend. So, however, what we are noticing is VIX potential could be in this tunnel between 11 about 16, 16.5, and about 20. So between these 4 points in the VIX, okay, actually, if we got this part correctly, then this would be a range where you want to buy the VIX. So could this be the ultimate buying opportunity in the lower part of the trading tunnel of the VIX? We think the answer is yes to this question. So these are the conditions we're observing in order to turn from bear to a bull, short term only. Condition number 1, if oil does not reverse on the 53.2 by 4 p.m. today or Monday. And number 2, if we get another move 7 instead of getting 2, 11, or a 6 move today. Key takeaways: short any intraday bounce. Yes, start buying some puts at the open. Stair step at 10:15. Add some more at about 1. Add some more at about 2:45. Guys, manage your accounts. Trade wisely. Use profits that you will get today between 1 and 4 p.m. to open puts for Monday drop if we do get a confirmation and move 2 or 11 or 6 formation. Now, all bear bets are off. If oil, again, does not break the level of 53.2, if S&P 500 creates another move 7 formation, guys, this could be one of these phenomenal days that nobody's actually expecting. So do not give up, okay? Because this is the time when the market pushes you to the max, where you doubt everything that is in front of your eyes. Every single chart that you start doubting actually tells you that the market is just about to go the direction that we have been calculated to do. So don't listen to the news. Stick with the charts and the 13 market move. Trade like a rock star today between 1 and 4 p.m. Make it happen. I'll catch you on the next trade soon.
Can't you see?